Greetings. This is part 2 of my 5/29/2022 weekend market update. I meant to do this at the back half of part 1, but I hit stop instead of pause, so I'll just make it 2 separate videos. This part 2 will be Ian boxes. Ian boxes are only something you'll hear me talk about as the markets appear to be recovering from a deep bottom. If we don't recover from the deep bottom, the Ian boxes will fail. As always, this is for educational purposes only. Anything I say is in the spirit of education, should not be investment advice. I'm a doctor, not a broker. I pay for the tools that I use, and trading involves risk. You alone are solely responsible. We already looked at this. Again, I post videos like this on a daily basis at https://stocksanddocs.com. There's no charge to come and see the videos. So, the boxes. This is an old stock from a great old guy who's no longer with us named Ian Woodward. And Ian would tell us how he used to watch leaders breaking out as markets started new bull market runs. And he would know that the market was legitimate when breakouts started to work. And then he talked about how you could take the stocks in the market and divide them into what we now have as 11 boxes. You have a 9-box matrix that's defined by the annual earnings growth and then the last 2 quarters earnings growth. And if you know the law of 72s, if you're growing over 50% a year or 100% a year, somewhere in the middle, you're going to double in 1 year. If you're growing in the 36% range, you're going to double in 2 years. And then box 7, which is one of my favorite groups, would be stocks that stub their toes on an annual earnings growth, but have some really good short-term earnings growth. So you can take most stocks in the market and put them into one of these 9 boxes. Then you'll have stocks that are low growth turtles. Used to be Gillette type would be his example, that have low multiples, low growth rates, and he called those consistent turtles, box 10. And then somebody pointed out box 11 was cash. Notice the slide is 30 years old. God bless you, Ian, wherever you are. And this really is the easy button of how to make money in the market. So, let me show you what happened. Here's the definitions. Back in 92 when he first taught us this, Ian made the matrix and looked at what happened between September 11th and February 12th. That's 5 months. And what do you see what happened? Box 1 was up 59% in 5 months. Box 2 was up 40%. Box 3 was up 47%. Notice how few you see is that have negative numbers, and how would you like 100% returns in 4 months? You'll notice that so many of these companies are no longer trading today. And the reason for that is these were high growth small companies that actually ultimately were bought out or went out of business. Okay, so that was once. How about 98, 99? Created the same boxes. You've probably heard of some of these stocks like Dell, Microsoft, Cisco, and Amgen. Imagine Microsoft growing 50% a year. Wow. From October 15th to January 22nd, 98 to 99. 3 months and a week. There were 190 stocks that populated these boxes. Their average return between October 15th and January 22nd was 67%. Box 1 was up in that short period of time 94%, box 2 85%, box 7 102%. Huh. How about more modern days, 2011? All right, we're looking at the market on September 1st, 2010, and the top of the market was April 29th. So you got 3, 7, almost 8 months. We only took stocks with high ERG, and then we looked to see what happened. Well, the box 7 stocks were up 106%. The box 1s were up 125. Even the box 9s, the slow turtles, were up 50%. Oh yeah, the S&P was up 24%. So even the turtles were double the S&P, and the turnarounds were 4 times the S&P. And here's the different returns based upon the boxes, and then here's the S&P 500. How about 2013? Same story, list of stocks in the boxes. Let's look at what happened to their returns. And what you could see here is the S&P 500 was up 6.8%, and you could see box 4 led with 31%, box 5 27, box 2 25, box 6 19. All of these are above the S&P 500, even the laggards. And if you take all the stocks that had earnings growth in the boxes, it was 16.4%. So I think if we're at a bottom, maybe it's a good time to create a box list. So let me show you how I use HGSI to create a box list if you like to watch Ian's boxes. HGSI, sort of like the reference groups, is like this giant file cabinet. And in that file cabinet, you have the components of the major indexes. You can look at various component lists, what's in the various ETFs, and so on and so forth. But we're going to use it today for the kitchen sink, which is all securities. I'm going to hit Warehouse View, and I'm going to open up basically a spreadsheet of all securities. Now I want to filter these securities to only look for stocks that have an ERG, earnings per share plus relative strength plus group rank, of 240 or higher. So I'm going to go into filter, and I'm just going to type in ERG and see if I find, ERG 240, EPS rank, relative strength, group rank, box stocks. Okay, cool. So now, and let's just look at what's in this filter is giving me. Last close greater than 1. I don't want those. I want 5 or higher. Volume, I like to be 250,000 or 500,000 rather. ERG of 240, and it has to have a box score. Okay, hit, now hit OK. So I've got 153 stocks. Now, one way to do this is I could find boxes on this. I know the boxes are on this somewhere. And you can already see this is going to take too long. So I don't want to do that. This has got all the different fields, the technical fields and fundamental fields. And I didn't preset this to bring the boxes close to the top, I don't believe. So I could find, here they are. I could find the boxes, and I could go, all right, these are the ones that are box 10, these are box 9, 8, 7, so on and so forth. But in HGSI, I can do it automatically. I come in, I hit the pie. I already had it set up, so it did it automatically. And what I do is I basically find the slice for HGS box stocks. And now, what's really cool is I hit make groups from slices. And we're going to call this group HGS boxes, bottom, maybe. And 5.29.2022. Hit OK. And now it's basically going to build for me or you. Come down into user groups, and we can find HGS boxes, maybe 5/29/2022, and it will tell you the components in each of the boxes. Now you could make your own spreadsheet, perhaps like this, and then you could be tracking every time one of these stocks breaks out to get a sense. You could even buy, if you so decline or incline, the stocks in there. What do I like to do? I like to create that spreadsheet, and I like to track these because if nothing else, odds are that the box stocks are going to be the leaders on this market turnaround. Now, I will from time to time create this list. And, I used to get into nice discussions with my buddy George Lee before he passed about whether the boxes were working anymore. And the key point is the boxes are only supposed to work when you're at a deep low and reversing after a sell-off. So I thought maybe we're at a market low in January 24th. We know it wasn't. But let's look at what happened. So I can do a thing called the group performance analysis. Let's just pick all those in that market low. Let's highlight all of them. And let's go hit OK. And before I do that, let me pull up. Now I'm going to just do this. So that was January 24th. And I do not expect these to look impressive because the market kept getting lower. And we'll just do it till Friday. How have the boxes done in a bad market? I don't expect them to have done well, okay? But then I'm going to do something else. Boxes 1.24.2022. Save. And they have not done well. No surprise, because the markets have sold off so much, the boxes did poorly. Interestingly, despite the fact, well, you know what? There is a story here. The markets are down 20 to 30% from their 52-week highs. The S&P 500 is down 5.59% from this date, yet several of the boxes, the 1, 2, and 7 specifically, have actually outperformed. Now, what I want to do is just a little thing different, and then I'm going to say goodbye. Let's just go to majors. Let's look at the S&P. So we can change this to this. All right, I got a lot of stuff in here. So I did this on January 24th. So was there any run after January 24th? So this is probably, all right, so this is when we started it. And then the market ran up to February 10th. Kind of short, but let's just repeat that. And then we're going to say goodbye. Group performance analysis. January 24th to February 10th. This is where the market peaked. Again, not that impressive. Where the S&P 500 was up 2%, the box 2, 7, the not a box 1, and the S&P 500 you could see there. So the message here is not that boxes don't work. The message is emphasizing what I said before. Boxes work if this turns out to be a major low. You now know the stocks from the boxes that are supposed to lead off the bottom. Watch them. Highlight them when they break out. And when you get a sense that there are a lot of breakouts, then maybe you've got a sense that this rally is working. Goodbye, everybody.